Hey everyone, welcome to Accounting Basics. Today, we're breaking down one of the most fundamental concepts in accounting, the journal entry. Whether you're a student, a business owner, or just brushing up on basics, this is for you. A journal entry is the first step in the accounting cycle. It's how financial transactions are recorded in a company's books. Each entry reflects a transaction using a double entry system, meaning every debit has a corresponding credit. A journal entry includes the date, the accounts affected, amounts debited and credited, and a brief description. For example, if you buy office supplies for $100 cash, your journal entry would look like this. Here, office supplies is an asset, so it increases with a debit. Cash, also an asset, decreases with a credit. To understand journal entries, remember the golden rules. 1. Debit what comes in, credit what goes out. 2. Debit expenses and losses, credit income and gains. 3. Debit the receiver, credit the giver. And that's the basics of a journal entry. If you found this helpful, give it a thumbs up, and don't forget to subscribe for more accounting tips. Drop your questions in the comments. We're here to help.